Hi guys, my name is Vineet Nair. Welcome to my channel. This is my first video where I'm trying to break down the news from the market in India and in the US and to try to understand what's happening in our economy and how do we take advantage of that to basically, you know, make some money through investments and also to have better bar conversations. Honestly, I'm 25 years old. This is what I want to do. There are a lot of people on YouTube who are doing this, but most of them are already further on their journey, and a lot of them are just stock market focused. And I'm trying to tie the picture where you can understand what's happening in the news and in the economy, in the politics of the country and everywhere else. And let's try to break down without getting too opinionated about things as to what would cause something, what is the correlation, and what is the causation at the root of this. I don't know much, but I'm here to learn, and I hope I'm just 25, guys. I'm just starting off with my journey, so I don't know much. I'm trying to learn, so I hope you guys enjoy this journey as well. If you like what's happening here, hit the like button, hit that subscribe button. This is my first video. I have no idea what's going to happen. Let's go right at it. So, big news of late in India, at least yesterday, first, rather 31st of August, India released the latest GDP numbers. So, in India, the GDP comes out, I mean, most of the countries, the GDP comes out 4 times in a year um, at the end of each quarter, and all of it is compared with the exact same quarter from the previous year, right? So your base is your previous year's base. And so the numbers on the screen right now are for 2021, April to June, 20.1% surge. So many people are thinking that this is a good thing because, compared to last year's huge uh, basically pulverized economy, which was 24% contraction this time. We are at 20.1%. But the thing is, this is probably not that great. So let's try to break down if it makes sense or if it doesn't make sense, if it's good or not good. So let's dive right in. So basically, it says that it's at 20.1%. Now, this is aided by the low contraction that we had last year, right? So this is basically 20% since then because the nominal value would just still be a little better because that was so bad. But to truly understand if it's a good value, we'll have to look at this number uh, compared to many other, you know, benchmarks. One would be to really compare it to 2019 numbers to see, okay, are we even close to what it was pre-pandemic? The other thing would be to compare it to this year's first quarter to see, okay, how bad was the second wave economically? And then we can start to really come up with an opinion of, okay, whether this is a good number or not. Has the government done a good job or not? Right? Um, so let's see. So the Economic Times has a paywall, so let's skip this. We're all trying to save money and make some money. So let's go to this article here. I found this really good article on Indian Express. I haven't read it, so let's get down and try to understand what they say. Right? So, uh, uh, MOSPI, which is basically Ministry of Statistics and Program Implementation, they are the body in India who releases the GDP every quarter end. So essentially, for this quarter, I've got a message on my phone, guys. I'm so sorry. Very unprofessional. Really sorry. Anyway, so basically, this quarter, the numbers again released by them. So what data do these updates contain, right? So the first is GDP, which is the total monetary value of the final goods and services. So the GDP, basically, the formula of the GDP of a country is it essentially calculates the value of the exports and services in a country, or rather the value of the goods and services in a country, not exports, rather goods and services. So the formula, if I remember correctly, is it takes consumption, so your public or like rather consumption, the private consumption in the country, plus gross investments, plus government investments, plus government spending, and to that you add the difference of your exports minus import. So what it looks like is basically consumption, that's C, plus I, which is government investment and private investment, plus S, which is spending, government spending, plus X minus M, which is exports minus X minus I, which is exports minus imports. And so that's your GDP. right? And that's the first aspect that they're talking about. The second aspect they're talking about is the gross value added. So now the gross value added basically takes into account uh, the subsidies the government gives out and the taxes that are levied on these products. So basically, it adds back uh, the subsidies to GDP and it minuses out the taxes. So GVA, gross value add, is equal to GDP minus taxes plus subsidies, right? So these are the two metrics that they're talking about here. So on the face of it, the total output should be the same, but every economy has a government which imposes taxes and also provides subsidies, right? So another thing to take note is the GDP is usually pegged against a base year so that you can account for inflation. So that is the nominal GDP, right? So I'm fairly sure what they're talking about here is the nominal GDP. So okay, you can see this here. It says add 2011 to 2012 prices. So that is basically the base year. So this is nominal GDP, which is pegged against 2011 to 2012 prices. So it's basically taking into inflation since then, right? Uh, why this is required is because you could have the same output, but because of inflation, your GDP actually would have come down. Your real GDP would have come down. So nominal GDP accounts for that inflation. Um, or rather, the real GDP would remain the same, but the nominal GDP would change. Sorry. Okay. So what do the latest data tell us? So the data showed that the Q1 numbers were 20.1%, while the GVA grew by 18.8%. So now over here, let's see what they say. Okay, so difference between the two is absolute values will provide a sense of the role of the government played. As a rule of thumb, if the government earned more from taxes than what it spent on subsidies, GDP will be higher than GVA. If, on the other hand, the government provided subsidies in excess of its tax revenues, the absolute value of GVA would be higher than the GDP. Okay, this is something important. So if you look at the Q1 numbers, GDP was higher than GVA. So that means um, GDP was higher than GVA. So basically, the government earned more from taxes than what it spent on subsidies. All right. So that's something to take into perspective here. So you're already starting to understand things. Um, all right. In the year-on-year comparisons, in other words, the total output of the Indian economy in the first 3 months of the current year was 20.1% more than the output created by the economy last year, the same time, right? It is important to remember that GDP and GVA have contracted by 24.4% in the second quarter of last year and 22.24% in the first quarter of last year. Okay, so does that mean India has registered a V-shaped recovery? Okay, this is what we want to understand. No, it hasn't. So this thing. So there is a difference between an economy benefiting from a low base effect, which is what has happened here, and one registering a V-shaped recovery. A V-shaped recovery requires the absolute GDP of an economy getting back to the level before the crisis. That means we should have these GDP numbers same as what it was in 2019. The total GDP and the total GVA are shown in the table. India's total output in Q1, whether measured through GDP or GVA, is nowhere near what it was in the Q1 of 2019. Okay, let's see what this table is about. All right. So basically, this is the GDP. Let's look at the GDP then. So 2019-20, we are looking at, so private consumption is at 20 lakh crores, and now we are at 17 lakh crores. So we are nowhere near. Our government consumption has increased. Uh, Fixed capital formations are still less. Net exports are less, or rather more. Sorry. So we have a higher this. Oh, okay. So I think this means so the net export I think is negative because so do they mean like the net export? So basically we have imported more. Hence this was more, but here we have imported less or we've exported less. So we'll have to really understand what that is. Let's see. In fact, both variables suggest India's output levels are closer to 2017-18 levels. In other words, India produced the same amount of goods and services in Q1 this year as it produced in Q1 4 years back. Um, so the lofty increase in percentage are in percentage terms, and while they look good, they should not be scoffed at. They are, for the most part, a statistical illusion created by the very low base effect compared because of the lockdowns and stuff like that. Okay, here's another way to understand what is happening. Imagine that the GDP was rupees 100 in 2019, then it fell by 24% to rupees 76. Then it rose back to rupees 91% in the first quarter, right? So as such, even though the GDP has risen by 20%, the actual output is still 9 rupees lower than it was 2 years ago. Okay, so we've got that just now. Okay, what do the subcomponents of the GDP tell us about the state of the economy? Okay, so the GDP data shows what is happening in the four engines of economic growth. In India's context, the biggest engine is consumption because we have a huge population, a demand from private individuals like you and I. The demand typically accounts for 56% of all GDP, right? The second biggest engine is investment demands generated by private sector businesses. So this accounts for 32% of the GDP. So we already had 56 and now we have around 32. So that brings us to 88, and then technically call the gross fixed capital. The third engine will be the goods and services by the government, accounts for 11%, right? And this is arrived at by subtracting the demand Indians have for foreign goods. So basically now they're talking about the export minus import. So the demand for foreign goods minus the demand from foreigners for Indian goods, right? So basically GDP is C plus I plus J plus net export. So basically the next net export is equal to export minus import, right? So as the data table shows us, private demand, the biggest growth engine in Q1, was down to almost exactly the level where it was in 2017 and 18. So let's go back here, 2017, 18. Yep, almost exactly the same. Look at that. It's only like 611, then 905. That's crazy. Okay, this is the most important variable and the most worrisome one as well. So basically, people aren't going out and spending. That's because unless demand from private individuals increases, businesses will not be enthused to invest more. So unless you and I go and spend, businesses aren't going to invest in products and their businesses to grow as well. Because again, remember, this is 56%, right? Yeah, this is 56% of the GDP of our country. So that's worrying. The government strategy has been to revive growth by stimulating the private sector investments. Okay. To this end, the government has given tax breaks and other incentives to existing companies. But unless private consumption demand rises, the strategy is unlikely to bear fruit. So basically, what they're saying is the government has gone out and tried to bolster this 32%, which is the private sector businesses and their investments. But this only becomes useful if we go out and spend to buy their products. Because if no one is buying the products, the companies are just going to keep this cash for emergency services or some, like, not services, but emergency uses. And they're going to be very, very cautious with their investments and their spending, right? So it is also noteworthy that the government expenditures have fallen below last year's level. So I think we did see that. Let's look at that again. Um, Government final consumption expenditure, you look at that, it's actually fallen below last year's level. So that's true. This is 421, that's 442. So the government has actually spent less. This could be a drag on future growth. At a time when all sectors are struggling to create demand, the government is expected to resort to what is called counter-cyclical fiscal policy and spend more than usual. That's correct. That's what's happening in the US. Okay, so let's see what else is there. What does the GVA data tell us? So what that tells us is that specific sectors are doing well and which are struggling to add, and there's some which are struggling to add value. Okay, so as things stand, only two sectors, agriculture and electricity and other utilities, have managed to grow more than they did. But the most worrisome bit is that GVA of trade, hotels, transports, communications, and services related to broadcasting and construction is less than what it was even in 2017 and 18. These are two sectors that create lots of jobs for unskilled workers, and the weakness implies higher unemployment levels. The former is particular, it's the former in particular is the sector that has most of the contract services. Okay, so the former, so what do they mean by the former here? Are they talking about communications related to broadcasting? Oh, I would have thought construction is contract services. Okay. From a policy perspective, a recovery here requires fuller levels of vaccination and improved public confidence. Because essentially, what we've understood from this article is the numbers by itself don't seem that might seem good because it's a percentage increase. But if you try to dig deeper, you realize that it's actually not that great, right? So the numbers aren't really good enough. So, okay, there's another article on money control which says that it's not strong enough to catapult the economy. Look at that. And I bet they're talking about the same thing here. So GV at base price to 1112. Again, they're comparing to 1112. Okay. Um, few outliers such as manufacturing and construction sectors. Okay, so that were primary growth engines for the first quarter. Private consumption, expenditure, and gross capital formation, a mark to gauge investment activity, were the bright spots on the expenditure side. Okay, okay, okay. Let's look at these numbers again. It's a very interesting table. Okay, so the GVA, right? Okay, let's just try to see this though. Gross fixed. Okay, all right. Let's go to the GVA though. Agriculture has increased compared to last year, and we are better than ever before. Okay, mining and quarrying, it's come down. Manufacturing has increased as well, but it's just about the same as it was here. Not so good, but it has definitely bounced back a lot. Electricity has gone up. Constructions is yet to hit what it was before. But it's close. This trade and hotels and stuff is nowhere near. It's a damn slow recovery. And we expect that from what we know of the new variants and well, essentially COVID transport and hotels and stuff are going to be really going to be one of the slowest industries I feel to come back, along with like aviation and stuff. But aviation should pick up though. Uh, People are probably getting more bored inside, and they probably want to travel. But let's see, that again depends on how open other countries are. Financial and real estate definitely recovered. Still a little bit to go though, till 2019 numbers. Hmm. Okay. Okay, this is something else I like to do. Uh, Try to see what another thing I really like to do is try to see what's happening on Twitter. Usually, usually, I can't use Google Chrome for some reason now. Um, I know you guys want to spam my email. Oh, yeah, never mind. Never mind. But usually, GDP Twitter. Let's do this. Bing. What's Bing? GDP Twitter. Yeah. Let's see if we can get a good. Real GDP has strongly bounced back. But it really hasn't grown back, has it? Look at that. India's GDP rate. Minus 7.3. So I think it's just what is the basis here though? Does anyone know what this basis is? Minus 7.3. Or the growth rate. Let's try to make sense of that. What is that number? Oh, okay. So it's the growth rate. Okay, got it. But compared to what though? I don't understand. This is big. Despite COVID. Look at that. So if you're getting a sense of what things are happening, right? The disconnect between what's happening on ground and what is the real thing behind the numbers is huge. And this is why it's important to understand more about these numbers. So you don't look at it at face value, you try to go behind it. And well, we've learned a bit today. Uh, I'll wrap this up. We're at 20 minutes. Thanks for watching, guys. Catch you on the next one. Hope you enjoyed this. See ya.